Hello everyone, welcome to EduTap and welcome to the Finance 360-degree session in which we are going to discuss the Digital Payment Index that has been released by the RBI recently. Okay, so this is one of the most important index of the Reserve Bank of India, and today we are going to discuss the value for this Digital Payment Index for the March 2025, as well as we are going to discuss that why the increase has happened in the value. Okay, so what are the main parameters due to which there is increase in the value of the Digital Payment Index. So I hope I'm clearly audible and visible. First of all, give me a thumbs up if everything is fine, and let's start with this Digital Payment Index so that you have the clarity about the index, and this index is important from the descriptive and objective point of view of the examination. Okay, so good morning everyone, welcome to the session. Now before starting with the session, do subscribe to the YouTube channel of EduTap so that you continue getting these relevant videos, as well as join our Telegram channel where you will get the PDF of the session, and the link for the Telegram channel is provided in the description box below. Okay, so starting with the Digital Payment Index for March 2025 that has been released in July 2025. Okay, so the RBI Digital Payment Index has been released, and the RBI has been publishing the composite Reserve Bank of India Digital Payment Index since January 1, 2021. Okay, so for the first time the Digital Payment Index was released in January 2021. Okay, and since then the RBI has been publishing the Digital Payment Index on the half-yearly basis. Okay, so to capture the extent of digitization, now the Digital Payment Index, it captures the extent of digitization that has happened of payments across the country. So the Digital Payment Index, it showcases, it represents the deepening and the penetration of the digital payments in the country, that how much deepening has happened of the digital payments in the country. So the Digital Payment Index, it captures the extent of digitization of payments across the country and the deepening and the penetration of the digital payments across the country. Now the index for March 2025, so you can understand that if the Digital Payment Index is improving, that means the value is increasing for the Digital Payment Index. That showcases that there is further deepening and penetration of the digital payment that is happening. The digital payments are further increasing in the country. So the index for March 2025, the Digital Payment Index for March 2025 stands at 493.22 as against 465.33 for the September 2024. So basically from September 2024 till March 2025, there is the increase in the value for the Digital Payment Index, and this shows that there is increase in the digital payments, and there is further deepening and penetration of digital payments that is happening, and the digitization of payments is improving across the country. So this is the basic idea. Now the Digital Payment Index, it is constructed based on 5 parameters. Okay, so the Digital Payment Index value depends upon 5 parameters. So that is payment enablers, payment infrastructure demand side, payment infrastructure supply side, payment performance, and consumer centricity. In the whole Digital Payment Index, the highest value is given to the payment performance, the second highest value is given to the payment enablers, and then to the payment infrastructure supply side, and then the payment infrastructure demand side, and then to the consumer centricity. So the highest weightage is given to the payment performance, that is 45% of the total weight in the Digital Payment Index is given to the payment performance. Okay, now what is payment enabler? Payment enablers, they are the tools through which we can enable the payments. Okay, we require the internet, or we require the mobile phone, or at least we require the bank accounts, because let's say you have the bank account that is connected to your mobile phone, that is like through that you can have the UPI, okay, UPI ID, and you can connect your UPI ecosystem or the UPI system with your bank account. Okay, and you can make the UPI payments, you can make the payments through your mobile phone and through the bank account that you have. Okay, the Aadhaar card is important because there is the Aadhaar enabled payment system that is provided, that you have to just provide your Aadhaar card details and the biometric, and then you can make the payment through the Aadhaar enabled payment system. The internet is required for now for the UPI transactions, the mobile phone is required, the bank accounts are required, the participants and the merchants are required. If there are no participants, if there are no merchants, the payment will not happen. The digital payments or any kind of payment cannot happen, right? So these are the payment enablers that enable the payment, okay. So payment infrastructure demand side, now who are demanding the digital payments or who are doing the digital payments? It is us, the customers or the consumers or the people that do the transaction. So we are doing the demand of the digital payments, or we are doing the digital payments, right? We are the consumers. So what do we have? What tools do we have? We have credit card, we have debit card to make the payments, right? Similarly, we have prepaid payment instruments like the wallets we have to make the payment. Wallets means like the Paytm wallet you have, or let's say PhonePe wallet you have. Now there is also the CBDC wallet that is also coming up. That is the central bank digital currency wallet is also coming up, through which also you will be able to make the digital payments, right? So customer registered mobile and internet banking, you can use the internet banking. This is also payment infrastructure demand side, the infrastructure that the customers have to make the payment. So they have the credit card, they have the debit card, they have the prepaid payment instrument, they have the mobile and internet banking. So without the usage of the cash, they can make a lot of payments. The customers can make a lot of payments. Now fast tags. So you must have, like a few years back, there were long lines of long lines of trucks and the cars and such in front of toll plaza. Now what is happening, that line previously was moving very slow, but now there is a lot of the faster system that has been adopted with the usage of fast tags. Now you must have seen that the toll plaza do not have such long lines now if the people are using the fast tags, because the fast tag is a faster system where the cash is not involved. Okay, directly through the fast tag, through the scanning of the fast tag, the payment can be done to the toll plaza. So this is the idea, that this is the payment infrastructure on the demand side. Now coming to the supply side, okay, that who all are providing, or how the what is the infrastructure through which we are getting the services, the digital payment services. So branches are required. Now business correspondents, they are the agents of the banks, or they are the extended arms of the banks. Now ATMs, through that also we can ATMs are also there, through that we can do the balance inquiry, through that we can take out the money also. So this is the payment infrastructure on the supply side. POS terminals are there, through which we can swap the credit card or the debit card to make the payments. There is also the QR codes, scanning that we can make the payments. There are also the intermediaries that help, the agents that help us in the completion of the transactions and such. Okay. Next, payment performance. How can we check the payment performance? When the digital payment system volume is increasing. So through the digital payment system, the volume of transaction through the digital system is increasing. That means number of transactions through the digital ecosystem is increasing. So we can say that payment performance in the digital payment ecosystem is improving. Okay. Digital payment system value. That means the value of transaction. Volume means number of transaction. Let's say I have done 100 transactions today. I am giving 10 rupees to 100 people, let's say. So I have done, number of transactions I have done is 100. How much amount is the transaction of? The amount is of rupees 10. So the value is also increasing in the digital payment system. That means through the digital payment system, we are also transacting more value amount. Okay. So that is the idea. So basically payment performance, it shows that the performance of the digital ecosystem is improving. They are handling more of the volume of transactions, and they are handling more of the value of the transactions also. So this is the idea about the payment performance. Unique users, that means new users that have joined the digital payment ecosystem and that have started, the new users that have started the digital transactions. So that is unique users. Paper clearing. Paper clearing, this is the traditional method of doing the payments. Okay, like the check clearing or the demand drafts. So these check clearing, demand drafts, they are the traditional method of doing the transactions. They are the paper based. They are the paper based method of doing the transaction. Let's say before I had to give 50,000 rupees to my grandfather or to my mother, check, because before 2016 there was no UPI system to do the transaction. So I had to sign the checks, or I had to take out the checks and such to make the payment, right, or to do the transaction. So now that check clearing has reduced. Now if I have to give my mother 1 lakh rupees, or let's say 50,000 rupees, I can just do the UPI. That has become very easy, right? So the paper clearing has reduced immensely, and that reduction in paper clearing shows that the digital payment performance is very good, and the digital payment ecosystem is helping a lot. Okay, so paper clearing, the reduction in paper clearing shows that the digital payments are improving and they are increasing in the country. So paper clearing basically means that the paper based instruments are used less. The checks and demand drafts, they are used less. The traditional methods are being used less, and there is more of the digital payments that are being done. circulation in currency in circulation, basically cash has reduced in circulation and there is more digital transactions that are happening. So that also shows that digital payments are performing well. Okay, cash withdrawals, if the cash withdrawals have reduced, that also shows that the digital payments are increasing. Any confusion till now in the 4 parameters? Any confusion in the starting 4 parameters? Basically, in the last year, there was a directly, let's say, business correspondents were given, or there was XYZ term sub parameter was given, and it was asked that under which parameter it comes, So basically, you have to remember the sub parameters. That's why I am explaining each and every sub parameter, so that you keep that in mind and you are able to easily tell in the examination that which sub parameter comes under which parameter, and they have a certain categories. Okay, clear, nice. Consumer centricity. Consumer centricity basically means that how consumer centric the digital payment ecosystem is in our country. Okay, how much awareness the people have, how much of the education the people have about the digital ecosystem, how much of the digital transactions and the digital systems the people know about, how much aware they are about of the digital transactions. Declines. So basically, the consumer centricity also means that the declines should be low, because let's say you are making the payment and again the payment is getting declined. Now you do not even have the cash, so you will think that okay, I should not be using this digital payment ecosystem. It is very hectic and I was not able to make the payment. It is very like embarrassing also. Okay, so you will start carrying the cash and you will start making the cash payments. So decline should be less, because less declines means the faster the digital ecosystem is, the more people are having like satisfaction with the ecosystem, with the digital ecosystem. So like I do not carry the cash because I know that I can do the UPI or I can do the transactions through my wallets and such. So basically through the digital wallets, basically the declines, the lesser the declines, the better it is. It shows the efficiency of the digital payment ecosystem. Like when I go to the mountains, to my village area, so I always carry cash because I know that there the payments cannot be made through the digital ecosystem for now, because offline transactions are not there, right? So I have to carry the cash whenever I am going to my village area. But in the city area, in the town area, I know that I can use the digital ecosystem. So here I do not have to carry the cash. So basically, the lesser the declines, the better it is, and the more transactions will happen through the digital ecosystem. Okay. Next is complaints. The complaints should be like more complaints should be taken from the consumers to better the ecosystem, and let's say the complaints are reducing. That means digital ecosystem is becoming better and it is more consumer centric. Frauds, lesser the frauds, that means the digital ecosystem is more consumer centric and system downtime should be low and faster payments should be happening. Okay, so this is the idea. Now, I hope the parameters are very much clear. These are the 5 parameters. Remember the weightage, because the weight of the parameters are very, very important. The highest weight is given to the payment performance. Sub parameters also are important. That also you have to keep in mind. Okay. Now coming to the digital payment index. So basically the index for March 2025, has increased to 493.22 from the September 2024, when the digital payment index was 465.33. Okay, and now you must have seen that in the newspaper it was written that digital payments have rise 10.7% at end March 2025. So basically from March 2024 till March 2025, there is 10.7%. There is 10.7% of, there is 10.7% of increase. Okay, because the March 2024 the digital payment index was 445.50 and in March 2025 the digital payment index is 493.22. So basically the increase from March 2024 to March 2025, that is yearly increase in digital payment, is by 10.7%. So this is the basic idea. You can take out the percentage change. So this is the percentage change. So from March 2024 to March 2025, there is 10.7% of increase that we have seen in the digital payment. So index for March 2025 has increased to 493.22 from the September 2024 digital payment index of 465.33. Okay, now the increase in RBI DPI, this is again very important, because last year directly a question came from such kind of point, that the increase that has happened in the RBI digital payment index is because of two main parameters. So the increase in RBI DPI index in March 2025, the RBI DPI index has increased from September 2024. There is increase in RBI DPI index because of this was driven by significant growth in the parameters, that is the payment infrastructure supply side and payment performance across the country over the period. So what is the weightage of payment performance? Tell me very fast. What is the weightage of payment performance and what is the weightage of payment infrastructure supply side? Okay, so basically the increase in digital payment index, the value of the digital payment index has increased because of two main parameters. One is payment infrastructure supply side, and the second parameter due to which the digital payment index has improved is payment performance. Payment performance has the weightage of 45% and the payment infrastructure supply side has the weightage of 25%. Sorry, 15%. Okay, it has the weightage of 15%. So basically, due to these two parameters, there is the increase in the RBI DPI that we have seen. Okay, so basically, the increase in RBI DPI index was driven by significant growth in parameters, that is payment infrastructure supply side that has 15% of the weightage and payment performance that has 45% of the weightage. Okay, so this is the idea. Now coming to some last few points, that the RBI DPI has been constructed with March 2018 as the base year. So basically indexes usually have a base year, and in the case of RBI digital payment index, the March 2018 is the base year. Now base year value is kept at 100. So that, let's say in March 2019, the value of digital payment index was 153.47. So it can be compared that, okay, the value has increased. That means there is growth that has happened in the digital payments from March 2018 to March 2019. So basically March 2018 is taken as the base year, where the value of the index is taken as 100 for the March 2018, and the other years are compared against the base year usually. Okay, so RBI DPI has been constructed with March 2018 as the base year, as the base period. That is, the digital payment score for the March 2018 is set at 100. Now the DPI for March 2019 and March 2020 work out to be 153.47 and 207.84. These numbers you do not have to remember, but remember that in January 2021, when the digital payment index was announced, so it was said that the March 2018 is the base period whose value is 100, and at that moment only, in January 2021 only, March 2019 and March 2020 data was also released for the digital payment index, okay, compared to the March 2018. Now going forward, it was said in January 2021 that going forward the RBI DPI shall be published on RBI's website on semi-annual basis for March month, for the March and for the September, okay, and the digital payment index, like the digital payment index for the March month, will be released with a lag of 4 months. That's why the digital payment index of March 2025 is released in July 2025, and for the September also, the digital payment index for September will also be released with a lag of 4 months. So usually it is released in January. Okay, so this is the basic idea, that it was said that RBI DPI shall be published on RBI's website on a semi-annual basis from March 2021 onwards with a lag of 4 months. Okay, and the data for the March 2019 and September 2020, March 2020 and March 2019, this was released in January itself, and from the March 2021 there was regular data that has been released on the semi-annual basis with a lag of 4 months. Any confusion here? Any confusion, anyone? All clear? Okay, then let's see the questions now. So this is the first question, and before moving forward with the second question, let me show you that if you want to do the answer writing practice, there is Perspective 360 degree series that is taken on Monday, Wednesday and Friday at 5 p.m. by Jaskran sir. So Jaskran sir takes the perspective 360-degree session on Monday, Wednesday, Friday at 5 p.m. This is very good for your answer writing perspective, and recent topics are taken for your like Sustainable Development Report 2025, World Economic Outlook Report of 2025. So the recent topics are taken, the current affairs are taken, from which the descriptive questions can come, and in the sessions itself the descriptive question is given for your practice, and the answers are also shown, that what you can write in the intro, what you can write in the body, and the conclusion, so that you have the clarity that how the answers can be written and what can be the points that can be written in the different parts of the answer. Okay, as well as the homework question is also given in the homework question is also given in the session, for which you can write the answers in the comment section. That also gets evaluated if you answer within 48 hours. So this is the idea. Now this is the first question. I hope you will be easily able to answer this question, and this is the second question, so try to answer this question also. So this is it for today. Thank you everyone. Thank you for joining. Any confusion? Why March 2018 was set as base year? Was it due to launch of UPI and the latter? No, March 2018, it can be because of our understanding that, okay, we have to choose a previous year and we have to choose it after the digital ecosystem was developed, like after 2016. So by 2018, maybe the digital ecosystem was well versed, and that's why 2018 was chosen as a base year. Okay, so basically RBI had to choose the base year after 2016 and before 2021. Now 2020 and 2019 could not be chosen because it is very near to 2021. So that's why I think 2018 was in middle and it was chosen. Base year usually is a previous year that has some gap with the current year. Any other confusion? Yes, okay. So this is it. Thank you everyone. Thank you for joining the session. See you in the next session on Saturday. Thank you everyone.